Hello everyone, you're welcome back. Chris here, and I'm going to be your friend, your host, and your tutor in today's session. So today we're going to be looking at key levels and structure. In fact, let me just scrap off that word because most persons will think it's one difficult thing. A key level is just your POI, your points of interest, your area of value, where you're interested in getting into a trade. Right? So I said I'm going to be talking about key level and structure, why they're very important. I'm basically not going to be talking about liquidity now. Liquidity is also important, but then key level structure. So basically a key level is your point of interest. It can be demand, it can be supply, it can be a consolidation, whatever it is. As long as it is your point of interest, it is a key level you're expecting price to get to. And one of the things you would note about a key level is that a key level basically when price gets to a key level, price what pushes, right? Price moves, right? Because there are a lot of persons waiting on that particular area for their orders to get filled, and when it gets filled, what happens? Price moves in their direction. So a key level is always pushes price to the direction it wants to go to. So we can have something like this. Price can come, and let's say price gets to this key level, price what pushes, right? So a key level is just like I said, your area of value, your point of interest, your call it whatever, right? It is the place you're interested in getting into a trade. Now, what are the characteristics of a key level? Number one, a key level may be or may present itself on a higher and on a lower time frame, which is number one. Also, a key level may also be that if it's on a higher time frame, it is a higher time frame key level. If it's on a lower time frame, it's a lower time frame key level, right? Whether it is support, whether it is demand. Now, a key level will also will basically present itself in two areas in trend. It will either present itself in a continuation trend like this, which is a pro trend. You can either see key levels in pro trends, right? It can present itself in pro trends as continuation, basically, right? And present itself in a pro trend from which is continuation trades, or it can also present itself when there is a reversal. Let's say price breaks a major structure and price is ready to shift to the new direction. The key level can also present itself somewhere below here, and boom, we have a change to the upside. So a key level can actually present itself in a continuation trade or in a reversal trade, wherever, right? So that is where they can actually be found. And then another characteristic is that a key level is going to be unmitigated, or price may not fully get to it. Like price may not really get to the 80% mark, right? Sorry, the 50% mark, because for an order block to be completely filled, price must at least steer to 50% of the order block, right? This is not another block class. I believe everybody who's watching this video basically knows what another block is. So that is another one. A key level is going to be unmitigated because mitigation renders an area of value it renders it useless. It makes it empty, right? Mitigation is the reduction of risk, which is the reduction of orders, right? So if you say an area of value has been mitigated, it simply means the price has reacted on it, and the number of orders that are there have been reduced, and there are no sufficient orders enough to hold price or to push price to the new direction. That's why when price comes to a mitigated level, price can just boom, clear it and start going up, right? So that is that. So we're going to be looking at how it basically relates to structure, right? Key level and structure. Now the thing about structure is that the trend is your friend. You must actually trade in alliance with structure. You must actually trade in the structural direction. If price is bullish, you want to be seen taking bullish trades, except you're trading much lower time frames and you're trying to scalp. Scalping is, you basically know what scalping is now. Trying to take quick try to catch quick moves, quick reversals and quick continuations, right? We all know that the lower time frame basically what takes price to where the higher time frame is intending to go, right? More like the lower time frame sponsors price to the direction of the higher time frame. So it delivers, the lower time frame delivers price to where the higher time frame wants to be, right? So basically that is it. So if you're going to be trading key levels and structure, you basically need to, number one, know where is price heading to. Is price in a continuation? Is price in a continuation? Or is price in a reversal? You need to basically understand where price is headed to, right? Because the structure will be able to tell you where the protected levels are, where the target levels are, where you should expect price to move to next. This is why you must trade it in alliance with structure. Now, most persons actually ask, or they have problem with like placing their TPs and getting out early. And I'm like, if you basically understand what you're trading, there will be no need for panicking out of the trade, because if you trade in alliance with structure, if you trade in line with structure, you should not be scared that price is coming to take your SL, because like you know that, okay, yes, where you're trading from is a protected level, and where price is headed to next is what is a target level, right? So our target levels on an uptrend are always the higher highs, and our target levels in the downtrend are always the lower lows, right? These are places we expect price to take out next to continue the trend. For price to keep a lower, a bearish trend on, for the market to keep a bearish trend on, price must keep what's breaking these lower lows, breaking the lower lows, right? And that is it. And for price to keep the uptrend going, price must keep what's breaking the higher highs. All right, so let's look at the chart and look at a few examples. All right, I think I marked out one here, more like I'm expecting G to come here, but let's just see. So I'm going to first go to the daily and check, because something happened here. See how key levels basically align itself, and in line with like what the trade is doing and whatnot. So let me okay, so on the high time frame, we can basically see that price was in an uptrend before. Price was in an uptrend before until this low was taken out, and also this low was taken out as well. Right, so every other area here has been mitigated, so our focus is going to be shifted from here. We're going to check if this area is not mitigated on higher time frame, because although this is not proper mitigation, but then I've spotted my key level. My key level is actually this area. This is where I'm interested in taking my trades from, and that is where price reacted from. Anyways, it's a story, and we're going to basically look at it. So this is the 8-hour time frame. Okay, beautiful. So price has not really mitigated the other blockades. Price has not really mitigated the other blockades, right? Price has not really mitigated the other blockades. You should know how to mark out another block. Today is not a class for other block. But then you didn't really get to the other block, but then if it cleared this liquidity out, then I may be satisfied. Okay, price took out the liquidity, but didn't get to the other block. Price took out the liquidity, but didn't get to the other block. Anyway, so since price actually did that, right? Since price did, I can see a shift here. 6 hour. Let's go to 6 hour. This is GBP USD, by the way. When we go to 6 hour, we go 6 hours. 6 hour time frame. 6 hour time frame. You should know what a time frame is. Now 6 hours, it just simply means every candle we're going to be looking at here took 6 hours to completely form. Right, so see what happens when price came in contact with the key level. After taking out the liquidity, price was dropped. Right, price dropped. Now there is a shift here, but I cannot go down much. I can't go much low to the lower time frame to show you, but there's a shift there, and then there's also another shift here. Basically, what's confirming that price is what temporarily going towards sell. because I told you guys that after when price has come in contact with the high time frame key level, price will shift. That's if to say it is a bearish key level, price will shift to the downside. After shifting, which is this change of character, price will also break. Price will break another level, confirming that okay, yes, price indeed wants to sell. Because the break, I told you guys, it is not the change of character that confirms your sell. The change of character does not confirm your sell. What confirms your sell is the break of structure next to the change of character. So when that has happened, what happened? Price came and reacted to this order block. Price came and reacted to this order block and sold. Right? There's a form of liquidity below here, acting as an inducement. And then, we are going to be targeting where the lower lows. This is the next low to target. Although most persons can go greedy and say they want to target the last structural low before that push happened. Some persons can target here. Anyways, so that one is that. Let's see how much of potential this trade got. So if you actually target this first target here, your SLs were above the other block. This is a solid 3.22 RR trade. If you leverage this on MT5 or MT4, you should be in for a lot of money, right? You should be in for a lot of money. All right, so this one actually played out beautifully. And then what happened after price reacted to the other block and dropped? Price it was expanded. For those persons who are very familiar with expansion, I've taught it several times. Price expanded, and what did I tell you after an expansion has happened? After an expansion has happened, we don't really expect price to come back to the extreme, right? We don't really expect price to come back to the extreme. We actually tend to take, or others that are taking right from the other block tend to play out more often, because there's really nothing attracting price to this upside again. It's more like an empty void. An empty space. Anyway, so what happens? Price actually reacted from this mitigation block here. This breaker block rather. Call it whatever. Expansion type entry. Price reacted from it. And price was dropped. Engineered liquidity just before it. Before what price dropped. So this is also a beautiful 4.82 RR trade. Leverage this on MT4, MT5 with $100. You're in for an extra $400 profits, $482 profits. All right. So you can see this place price reacted back. That's price reversed back from. Let's see what happens. Or let's see what happened. Let's see what happened there. It's quite an interesting one. Okay. So let us see what happened here. So before price actually became before price actually got to this bearish key level, you can see that price was in a downtrend, right? You can see that price was in a downtrend. Price was in a downtrend. High, lows, high, low, high, low, high, low, high, low, high, low, high, low. And what happens? Price broke the structural low. This break alone is what? That break alone confirms that price is ready to shift. And when price breaks a structural level, price leaves behind a key level next to it. Right? So price leaves behind an order block, an AVG, or an area of value, or a type of point of interest as you know it. Right?